Hi, everybody. This is Scott Forge from C&J REIG,
Tabitha from the other part of CNJREIG. How
and
are you?
and today we're here with Hannah Kessler from the Money Multiplier, who happens to be one of our vendors. So thank you for joining us today, Hannah. And
Absolutely, Scott. And hey, I'm so excited to be here. And y'all, even more excited to talk about my favorite topic, money.
exactly. So
I think
before we get
everybody loves that subject.
yeah, before we get into the money part, what we want to do is find out who is Hannah Kessler?
Mhm.
Like what were you doing before you got into the money multiplier and what made you get into the money multiplier?
Yeah, yeah, man. So, and actually, as I'm broadcasting in today, I live down here in Daytona Beach, Florida, but I did not grow up here. I'm actually a Midwestern girl, grew up in Kansas City,
Right.
and I moved down to Florida actually in 2018. And the reason I moved is because I was starting to get into the business with mom and pops, and dad was actually a chiropractor in the Kansas City area. So that's where he had his clinics at. And that was actually my first ever job when I was 14 years old. And, I was working the chiropractic office. I was doing that. And then, long story short, I talk more about this in my book, The Single Millionaire Chick. But I got fired from the chiropractic office. And the reason being is because I fell into the road of addiction. So got fired, terminated from there. Luckily, I spun my life around and I was doing a little bit of college, going to school, trying to figure out what I wanted to do with my life. I love teaching. I love animals. I love math and numbers. And so actually I was working a job at Cracker Barrel at the same time of attending community college in Kansas City. And I was going to maybe pursue being like a CPA. And I was sitting there in class and I was like, I don't think this is my gig. I don't think this is my jive. I just don't vibe with this. So
Sitting
I
behind a
dropped
desk all
out.
day?
Yeah, nah.
No.
So then I dropped out of college and then I was kind of looking at maybe pursuing my passion. And my passion is really fashion design. That's what I love to do. Honestly, in my lifetime, I would love to own my own boutique. I even know what my label is going to be called. It's going to be Hannah Nicole. And then when I open that
Nice.
boutique, I want to name it Aphrodite because in sixth grade, I really got deep into all of the Greek mythology. I love that
Okay.
stuff.
Oh, I'm with you. I can vision that. I
Nice.
see it
Yes.
happening. Is
The
it on your
boho
board?
sheet.
Got to have it up on your board. I can see the vision.
Yes.
Absolutely.
So then, I was actually touring some colleges. I was looking at the Savannah College of Art and Design in Savannah, Georgia. But that's when it kind of clicked with me that I'm like, oh my goodness, I'm going to go spend my years going to college, rack up all of this student loan debt. And then when I leave, I'm going to find myself like a 45, 50 a year job. I mean, I'm kind of working backwards in that way. So that's when dad came to me and I was having a conversation with him. And he says, well, hey, look, I need some help within my business. And his business at that time is the money multiplier. He says, I need help in my business. And if you're not going to help me, I'll go find someone else to help me. And I was like, okay, dad, well, what do you want me to do? So that's when I started taking applications, working with the underwriters directly. And I think that's the best place of where I started within this business because I know how these underwriters think. I really learned this business from the ground up. So I was taking the applications, being on the application team, and then it progressed to me traveling around with Pops as he would go and do his live teachings and talk on the infinite banking concept. I was this tech girl. I'd hand out all the handouts within the audience. And then from there, I was doing my own webinars and then COVID hit. And then right after COVID, the first event that came about, it was in March of 2021. It was Justin Colby's event. If y'all are familiar with him, he's very big in the mobile homes
Yes.
park
Yes.
business. Yes. And dad says, hey, I can't go do this event. So you're going to go do it. I'm going to put your ass on an airplane. You're going to fly out there by yourself and do this live event. And back at that time, y'all, I was 20 years old. I would be 21 that year. So I was like, okay, I went out, I did that event, and everything since then has just changed. And that's my passion. I love teaching on live stages. I love connecting with people one-on-one. But now, progressed to traveling all around the country myself, doing the TV interviews and different things. But, this whole concept that we teach, I started my first policy when I was 18 years old, and I didn't know everything that I know now. It was actually kind of dad saying, "Hey, Hannah, now that you're 18, you're going to close your savings account because you're old enough, you can own your first policy, and you're going to start your first infinite banking policy." And back at that time, I was like, okay, what am I doing putting all this money into a stupid life insurance policy? So then I really picked it up. I was practicing it, implementing it. That then, hey, I became a millionaire by the time I was 24 from my policies and then also real estate investing.
So,
Cool. That's awesome. I mean, that's a lot in a short period of time.
yeah, absolutely.
Like to me, you're like way ahead of the curve to most people at your
Mhm.
age at that time and what they've accomplished and how they pivoted from
Yeah.
what they were going to do into something as big as what this is and how it helps people.
And then I gotta say though, going from addiction to now, knowing you now, I gotta
Yes.
give you.
Yes,
Thank you.
We're
absolutely.
very proud because
Absolutely.
we've been there and done that also. So
Yes.
we wouldn't be doing what we do if it wasn't for
For
that
that pivot.
that whole change
Yep.
to
And
wake
have
up.
struggles. I
Um,
know. And I did not want to share those stories. Actually, it was my mentor who said, "Hey, Hannah, what is the story that you don't want to share?" And I shared that story with him. And he says, "Great. That's the story that you're going to be sharing on the NASDAQ stage, on the New York Academy of Medicine, and the New York City Bar." I said, "Oh my goodness, am I really going to be doing this?" But it blossomed me. I'm really using it now as a superpower because we're not invincible. We all have our struggles that we got to go through to get
mhm,
to the part of where we're at now.
exactly.
And I think by you doing that, you
Mhm.
resonate with not so much the older generation, right? Because
But the younger
but the
ones.
younger ones who are unsure or doing things that
Yep.
are leading them down a dark path, right? As that's what I call it. Like you got a fork in the road, right or left, light or dark, sometimes you choose one and it's not the right one. But how do you correct it and get back, right? Is it possible to do that? A lot of people don't see that.
So people like
really
you
cool.
say, yes, it's very possible.
Right, so
Um,
that's awesome. That's very, yeah, we're definitely proud of that. I mean,
Yeah.
that's, we've known you for some years now, but it's like we love you and your dad and everything you guys represent, how you are as people.
Everybody at the Money Multiplier, you guys are fabulous.
So,
So I have a question to get started. I gotta tell you, when we first saw you, well, Dad, we were on our way and we thought this was some kind of a scam.
Yep.
And we've had a lot of other people say, no, you can't do that. It's not how that works.
right.
How many times have you come across those people?
If I had $1 for every time I heard that, we wouldn't be talking right now, and my butt would be down in Mexico drinking a margarita on the beach.
Good place to be, right?
Yes, absolutely. So you get that a lot, right?
Right.
People think it's like, you can't do this. That's not how the policies work.
Right.
That's right. That's right. Because they're thinking about it in the traditional lens of whole life insurance. And I agree with that because if you're just going out there buying a regular whole life policy from your brother-in-law that sells life insurance, or you get in contact with the State Farm agent, right? You hear the commercials all the time when you're driving in the car on the radio,
Mhm.
And if you go
Yes.
out there and you're just purchasing that traditional whole life policy, they are absolutely correct. You're not going to have cash value in that policy, $0 in the first year, $0 in the second year, and very little in the third year. So that's why it's so important when you're wanting to implement this concept. You have to make sure that policy is designed properly on the forefront for high immediate cash value. And I'll give your folks a resource too. If for whatever reason they don't like my vibe, they don't like Pops and his vibe, or us over here at the Money Multiplier, that's okay. We're just here to deliver the information. But a resource I would tell y'all is go directly to the source of becoming your own banker. And if you go to infinitebanking.org, there's a practitioner's finder on there, and you can find somebody else who can set these things up and will do it in that proper format.
Right.
Yeah, I
Okay.
appreciate that part because I didn't know about the infinitebanking.org. And I understand that also because I would believe that people tend to say, hey, you like Hannah and her dad and believe in this, but
There's no
what
way
if-
you can't like them. I'm
right.
sorry.
But what if they're just BS and they're just ripping us off? So it gives them another, like we always tell them, go see Chris Nuggle and BYOB, go see the Banking Bros, Jeremiah and Jonah. I mean, like everybody's awesome in what they do and the message is about. And we also tell people that they're not
Mhm.
charging you anything and they provide you with services that
Yep.
cost nothing. So they don't say sign up for the policy and walk away. They're like, hey, if you join us, we're going to help you get through it. We're going to look at all your
Mhm.
finances. We're going to put you with a resource that's going to give you what they feel is the best option for you to utilize this tool that they're giving you. And you're not left alone standing there going, what do I do? Right.
Mhm.
And they have other people. I have other people text me and say, hey, it's it's Michael from the Money Multipliers. It's this one from the Money Multiplier. How's everything going? I was like,
Yeah.
that's so weird.
It's a huge family.
Yeah,
Right?
it becomes a family all over. So
Yeah.
the other thing I wanted to ask, so you said you started it, when you were younger, like you're not young now, but
No, young.
when you were younger. So if somebody doesn't have a lot, like say they only have a couple $100 a month that they can squeeze out because they haven't been introduced to this right away. Is it possible for somebody like that, a younger person that can only afford a couple, can they do something with that?
Yeah. That's another big question I get a lot too is, oh, well, don't you have to be stupid, wealthy, and rich to start
Yes.
this stuff? No. I mean, when I started at 18, I was still waitressing at Cracker Barrel. I was saving up $100 a week, and that equates to 400 a month. And so that's where dad says, okay, that's where you're going to start your first policy, that $400 a month. But if I wanted to, I could have been less aggressive with it as well. I always say the minimum and the good starting point with this concept, take your age, multiply it by 10. So if you are 40 years old, let's just say
Mhm.
40 times 10, $400 on a monthly premium. That's where I would really start. But honestly, my biggest advice, just totally even excluding the policies out of this, we should know our cash flow that's coming in every month. Take the
Right.
income, where is all of our money going, our expenses, how much is going out the door, but more importantly, how much am I keeping? Because I've always been taught it doesn't matter how much you make, it only matters how much you keep. And so those keeping dollars at the end of the month, in my opinion, that's the dollars that should start flowing towards the policy. So just look at it as it's nothing more than just that glorified savings vehicle. Because honestly, I got folks who do as little as $100 a month, all the way up to $540,000 a month. And you get to decide how much that you want to deposit into that policy. So I kind of make the joke, you pick a number in between there.
And that's
Yeah.
great because that was going to be my question of the big elephant in the room because people always ask me, I can't do this. I have only bills. And I'm
Yeah.
like, you decide how much to start with, right? So if you could start with $100 a month or $1,000 a month, everybody looks at this when they're presented with it going, I need 200,000 a year,
Mhm.
and it's like, no, you don't. You got to start somewhere small and go big. Somewhere small is probably easier to get the concept under control and understanding it, and then you can expand and create a second policy.
Like you're
You know,
saying though, if you put the $100 in a month, so just start that. Start small, and then once that's built up, so you got to pay that credit card.
right?
So if you pull out a couple dollars, put it towards the credit card, then that payment go back. So that see,
Yeah, it's a
Yeah.
mind shift, right?
right,
It's a
right.
mind
It's
shift.
just like you says, that's one of the biggest things. So
And
Yeah,
that's where I would start
getting
first.
started.
Start with their bad debts first.
Right.
People, most of the time, folks that show up at our front door, they're in debt. I mean, 78% of Americans are living paycheck to paycheck. That's a study done by payroll.org. And honestly, it's increasing every year because I get it, inflation, cost of living, et cetera, et cetera. But What you really got to do is take the control back. I mean, honestly, sometimes people are going to have those hard, honest conversations with themselves if they do want to make that change within their life. Do you need to start a side hustle? Do you need to sell some things? Are you spending unnecessary money someplace? Hey, that $5 Starbucks coffee every single day seems very minimal every day, but it starts to add up when you start looking 3,
Mhm.
6, 9 months down the road. So from there, when you start to accumulate the money that you're keeping, then again, my humble opinion, it should go into the policy. And then what I would say is the first step, if you do have those bad debts, like the credit cards, the car payments, because as we know in the real estate world, not all debt is bad debt, but that's
Right.
what's
Right.
to be the first goal is use the policy to go and pay off those bad debts first. And then once like a credit card gets paid off, let's just make believe you were sending like Capital One like $200 a month. Well, now since Capital One is paid off, most of the time what people will do is they'll treat that freed up $200 like it's just free spending money now.
Yep.
No, we got to be
Right.
disciplined with this. Now,
Right.
once it gets paid off, redirect that 200 a month. Now start paying yourself back into the policy with that money.
Right.
Right. Yeah, and that's how you
Yep.
grow it. And that's where everybody I think falters a lot because they look at I got all these credit card bills. And then once they get that money, then they're like, all right, now I got money to spend, right? Instead of
Yeah.
being disciplined and saying,
And to go back out and
look
run
at the
right back
plan.
up again.
Yeah, look at the plan. We help you as a money multiplier or banking bros or whoever. They help you with the plan to get through your debt and get to the other side where you have the freedom now.
Yeah.
And that's the great part about it. You're not like I listen to people go, well, I got a financial advisor. Well, I got my life insurance policy. And I'm like, yeah, but your financial advisor is not really advising you how to live. He's advising you to say, this is where you're going to be 30 years from now.
Yeah, we get that a lot. I got to ask my financial advisor if this is good. OMG.
So another question, or statement that comes up a lot is, I already know this. I already know this from my cousin who sells a policy, and it is the infinite banking concept, but it's not the proper policy. How do you explain that to people so that they understand that the correct policy they have is going through you and your team compared to the other people out there who think they have the right policy,
With the, yeah.
like the IULs, for instance.
Yeah. So it is a whole life policy. When you're practicing this concept of becoming your own banker, you only want to use a whole life policy. And Nelson talks about his thoughts on page 38 of his book of why, page 39 of why we want to use a whole life policy and his thoughts on the other vehicles that are out there. But number one, you want it to be a whole life policy. And then number two, how you know it's designed properly is when you put that premium into the policy, then immediately, and my definition of immediately is within 30 days, you have access to cash value that's there. Now, sometimes people will have old whole life policies that maybe their parents started or their grandparents. If it's just a traditional whole life policy that's old, it could still be used for this concept. Maybe it just wasn't designed initially on the forefront for this, but if it's got some age and maturity on it, you could be using that and there's probably some cash value that's in there. So what I would say is for those policies, if you can go and obtain what's called an in-force illustration, in-force, INFORCE, in-force illustration, call up that company that the policy is with, send it over to me, send it to my email, Hannah spelled the same ways forwards and backwards, Hannah@themoneymultiplier.com, and I'll give you my feedback of, all right, if this was my policy, what would I be doing with it? So that's whole life and old whole life. And then we can get into the conversation of IUL if you want, but yes, Scott, talk to me.
Well, it's what people say to us. Like, yeah, I know how it
Yeah.
works and I can do it. And it's like, no, this policy's just as good as the one you have. And I'm like, no, it's not because of the compounding,
Yeah, right.
But
and
the
the
IUL
stock market
part
types.
is where my mom's got lost
Yep.
because it went from the $125 to over $1,700 and she couldn't afford it anymore.
Right.
Wow.
So, yeah, it's like that. So I get very, I'm like, you
Yeah.
have a what?
You need to change that. You need to
Yeah.
convert it. You can, and people can do that, right? If they have a policy that they don't need, they can flip it to the correct policy, right? If it's possible.
They can, they can. There's something called like a 1035 exchange, almost like a 1031 exchange in the
Oh.
real estate space. It's just called
Yeah.
1035 in the life insurance space. But most importantly, like those IULs, it's just kind of funny. You know, those IULs actually came out onto the market in the late 90s.
Mhm.
Reason that they came out is because that these insurance companies wanted to be competitive with the high interest rates back at that time. And whole life has actually been around longer than the tax code's even been here. Tax code's only been here since 1913. So some of these companies have been around since the late 1800s, early 1900s, and whole life has been offered since then. So first of all, there's a very big difference of when these products came about. And an IUL, in my opinion, it's an investment. My definition of an investment is it can go up in value, but it can
Mhm.
also go down and lose value. A whole life policy cannot lose value. It's a guaranteed appreciating asset. So when I'm going to warehouse and store my money somewhere, I want to warehouse it in a protected vehicle that's not going to fluctuate with these external factors that I cannot dictate. You know, political environment, government
Mhm.
intervention, the markets, right?
Right.
So through the whole life policy is how you go buy your investments that involve risk. Okay. So that's the thing with IULs, and we can get deeper into it of the engineering and why it happens in that manner, but it's
Mhm.
apples and oranges, in my opinion, whole life and IULs.
Gotcha. They're two
So
different types of
that's another
structures.
day.
Yeah, that's a whole different ball game there. That's a big talk.
Yeah.
Yeah. So that's a good answer. I heard some things out of there that I haven't heard before, which is really important for people to understand. Those
Sure.
are an investment strategy where this is a whole asset.
Yes.
So that's the
Building your
difference.
banking system.
Right.
Right.
And people don't understand the banking system if they're not in the lending or banking business. They just don't get it.
That's true.
Cool. So that was really a lot of good
So I
information.
wanted to say, a lot of people have asked, and I've actually blown away managers from banks because they come up to me as their financial advisors. And I asked them, I said, did the bank take a life insurance policy out on you? And they're giving you $50,000 if something happens. They're going to give that to your family, right? Yeah, how do you know? So that's where the banks are getting it, right?
And that's it. That's it. And Tab's bringing up this great point. If y'all go and Google something called BOLI, BOLI, it stands for bank owned life insurance, because these banks own more in whole life insurance than like all of their land and their buildings combined. And if you look at their asset sheets right there, they have cash as their tier one assets. And then right underneath of that, it's cash value life insurance, because banks are the number one purchasers of whole life insurance in the whole entire world. And it's like, okay, banks, are y'all just stupid? Or are you guys doing something the rest of us just don't know about? So they're probably
Right.
doing something.
Yeah.
So these banks will go and make, like, if you ever walk into a bank, you'll notice there's a lot of key executives at
Mhm.
the bank. It's like the key executive of the loan department, key executive of the water station, of the coffee station, right? And
Yep.
make them as key executives so they have an insurable interest, so then they can put a policy on their body.
Right.
Gotcha.
That's and they
Yeah.
were blown away. Every one of them wants to know, how do I know this? And I tell them,
Go look up Boldy.
yeah, that's
They
you're
don't even
worth
know.
more than that
And,
50,000.
and the
Mhm.
funny thing is, they're in the banking industry, they're in the
Yeah.
finance industry, and they don't even know about this. That's how different it is. And people don't know. And like you're doing is educating people. That's what we're looking to do, is educate people more about this
Right.
asset, right?
We're
It's an
leading them
asset.
to the water. I'm
Right.
hoping that we can get them to drink.
Right. So
You
so
know?
our goal is to bring more people to you and the money multiplier. What outside of what we do, is there any other suggested strategies from you that you think would help us bring more people?
Get their
to this?
mindset so that they understand this
Right.
more.
Yeah, because most of the people that are coming out to the Central Jersey RIA, which I'll be out there this year, coming out in August and also in September. And then actually, I do believe Stephen from Private Money Club will be coming out on the 30th of July.
Okay,
So
cool.
I gotta update y'all on that, okay?
Yeah.
But
Awesome.
really, when I'm talking with investors, my favorite thing about this, there's so many other benefits, but if I have my investor glasses on, the reason I use my policies to go and make my real estate investments is because now I'm double dipping on my money. When I run the money through the policy first, I get that uninterrupted, guaranteed, tax-free interest in the policy. And then I can still leverage against the policy, pull out the cash value. And I'm a lender. It's just what I like to do personally. Invest in the things that you like, know, and understand. Me, I like lending. I like the paper side of real estate. I like notes and different things. So I will take the cash value out. I'll go give it to my borrower. And let's say my borrower is paying me 12%. Well, now I'm making money in two places. I'm making money over here in the 12% investment deal, and I'm making money over here inside of my policy. I'm double dipping on it.
Right. So
Yeah.
even though you borrow the money from your policy,
Mhm.
two pieces to that is, are you borrowing it from your own policy? And even if you borrow it, you're still getting the compound interest
Mhm.
from the whole amount or just what's left?
Ooh, good question. We'll get technical. This is logistically what's going on. So from all my analyticals, I'm not just withdrawing the money out of the policy. What I'm doing is I'm taking out a policy loan. Now, here's where the
Mhm.
paradigm shift starts to happen, because when we, like the consumers, think of loans, we think of it as it's a debt, it's a payment, and it's an expense. But we got to start thinking like the bankers, because a loan to the bank, a loan is an asset to the bank. So when I take a loan from my policy, what I'm doing is I'm putting my death benefit up for collateral, and I'm taking a loan from the general funds of the insurance company. So I'm using their money out here in the real world. And that's how and why all of my money that I funneled through the policy up to that point stays within there, growing that uninterrupted, guaranteed interest. So I'm essentially using the insurance company's money, and that's how and why my money is still able to grow.
Cool. That was another tidbit, another nugget. Well, I got the part of you're borrowing the pool of the money
Yeah.
and you're borrowing it against it, but you're leaving the compounding in there because you're not actually taking it against your own cash value.
Yes.
Right.
Scott, can I talk about that? Because that's one of my favorite things to talk about. Just real quick.
Sure.
Enlightening people on the opportunity cost of money. I know that's a big textbook name of it, but when we go and finance things, because you finance every single purchase that you make, you either pay cash for it, thus giving up the interest you could have earned on the money, or you bank finance it, aka paying out the interest to other people. And sometimes folks will love to go pay cash for things because they think when they pay cash, I don't have to pay any payments and I don't got to pay any interest.
Right.
But let's say I want to go purchase like a property, and this property is going to cost me $300,000. If I have that 300,000 inside of like my checking or savings account down at the bank, and I just withdraw it out to go pay cash for the property, the money's gone. All right, I've accomplished the goal of paying the cash for it, but the money that was inside of my pocket earning me interest at the local bank, it's no longer there. It's gone. So in order for me to go work for it or earn it somehow, I got to go out there and work for it, get it back inside of my pocket. So that's why we just add the one additional step of running the money through the policy first. So now I'm never losing out on that interest that's able to earn on this money for the rest of my life. What's called the opportunity cost, if y'all really want to nerd out on it.
There's some of the guys I can mention a few that I think are gonna really nerd out on that part.
Yeah, you get,
Because we've had the conversation with them. No, we have a policy, so we're definitely, hey, we're pointing to this one for them.
yeah. And the big concept of that, of cash, credit, good debt, bad debt,
Mhm.
how to use it's understanding the money, really. It's understanding where to put it first so that you can utilize and get the best results from it. And the one thing that I like to say is that everybody works hard for their money, but they don't let their money work hard for them. This allows you to have your money work harder for you instead of you working harder for it.
Well, it's especially
One of the
because a
concepts.
lot of people that we know, like ourselves included in this,
Mhm.
because we weren't brought up with
No.
this. We weren't at the age of 18 when we're learning this. So that's the next question. People that are over the age of 50 or 60, is this something that they should get started in, or is it too late for them?
Ooh, good question. Now, because I do agree, somebody who is younger, when they start this stuff, yeah, you're going to be better because you got so much more life to live with your policy. I agree with that.
Mhm.
But there's a quote by Rick Warren. Rick Warren actually wrote a book called A Purpose Driven Life. And in that book, he says, life is like a marathon. It doesn't matter how you start, it only matters how you finish. This is the game of life. And y'all have been seeing it like around, like on Facebook, people would be posting about it of like, hey, the KFC guy, he started KFC when he was like 69 years old or something like that.
Right,
Right.
yeah.
The Walmart guy started his Walmart company when he was like 45, right? So it doesn't matter when and where you start with it, but you just got to start. And so in my opinion, no, you're not too old because again, you got to finance every single thing that you buy. No matter if you're 75 years old or 17 years old, you're still going to be buying things in life. And on top of that, one thing that I don't talk a whole lot about, which I could be doing a better job of, is there's a death benefit on the policy. Y'all, it's not an if you die or graduate is the word I like to use. It's a when. And when that time happens, now you got this lump sum tax-free death benefit that's going to get paid out to your family. And that's how the generational wealth keeps going years after years. I mean, this is what the Rockefellers do. If you ever look up the Rockefeller waterfall method, there's another book out there from a good friend of mine, Garrett Gunderson, who wrote What Would the Rockefellers Do? Look into them, the Rothschilds, the Morgans, the Stanleys, the Barclays, and really how they're keeping the wealth within the family.
Yeah.
All right, we're gonna have to add that to our collection here. I got a little bit of space up here.
It was funny. When you came to our meeting the last time when you were speaking, we had the 10-year-old spin around and go, "What?" And an older gentleman, was in the audience and he turns to me and he goes, "I've been coming to meetings and things like this, like you, for years." He goes, "How come I never heard of this?" And I said to him, "You're not wealthy." And he goes, "Right." Because it's kind of like a wealthy concept, which you just brought
Yeah.
up. You're bringing it to the masses instead of the one percenters, right?
Yeah,
We're working on
yeah.
doing that as well and bringing as many people to understand it.
I
So
would like go.
wake up, wake up. Yeah. One more question that I have is, it's another thing people say, well, I can't get insurance because of my health. I won't be able to get it because I have cancer or diabetes or some other kind of ailment, right? So is it possible for people that have that pre-existing health conditions to be able to do this?
Yeah. So it is. If you are a diabetic, hey, if your diabetes, if your A1C is controlled, and what the insurance company looks as controlled is you're at the A1C at a level 7 or below. If you had cancer and you're 5 years from being deemed cancer free, the insurance companies will consider you. So it's not, if you're just that average Joe type of person, or if you do have some medical history going on, just be honest with your money mentor that you're talking with, because what will happen is you're going to have a one-on-one conversation. We call them strategy calls. And in that meeting, just tell them, hey, this is what happened. Here's what's going on. Do you think the insurance company will consider me? And we'll go do our homework and our due diligence to find out. Now, I will say, if you had 7 DUIs in the last 3 years, no, the insurance company for you. If you just got released from prison, or let's say, like, actually, this is my older brother. Sean was on kidney dialysis for a long, long time. And about 3 years ago, he got a kidney transplant. No insurance company will touch him right now. They want some waiting period, see if there's any flare-ups or complications. So instead, what he does is he puts policies on people he has an invested interest in. He has a wife, he's got 2 children. He runs a property management company down in South Florida on an island called North Captiva Island.
No,
And
right.
for my people who love to vacation, you should check that out, just for putting it out
I
there.
got- yeah, that's,
Put a phone number to us.
yeah.
You can add that.
I got you, CaptivaBeachSunset.com. Look it up, y'all.
Yeah,
Okay.
definitely. We're always offering that to people, because you gotta go to nice places. You don't do everything to just
Yeah.
down the Jersey Shore, right?
Yep.
So there is.
And he will, he'll put it on the key employees within his office. Dad did that in the chiropractic days. Instead of doing like 401ks or these HSAs or pensions for his people, he would start whole life policies for them instead. And again, that's a whole other rabbit hole we can go
Yeah.
down. But
Yeah. I got questions about that part that I know other people will also, but that's another
So
day.
have another call. We'll
And
have
another one.
another call.
Cool. So keeping in track with
Yeah.
time, I think we went over a bit
Way
here, but
over.
I mean,
Sorry.
if we just get into these things, I'm sure you do too, these conversations and this information. So you already mentioned it, but we'll do it again. What is the best way for people to get in touch with you?
yeah, y'all send me an email is probably the best way. My first name, Hannah spelled the same ways, forwards and backwards. Hannah at themoneymultiplier.com. I also have my podcast show, The Money Multiplier Podcast. It's on all streaming platforms and even YouTube. And then you can always just go to our website, themoneymultiplier.com.
Cool. And they can always come to our group, cnjreig.com, because we have you up on our vendor site where they can just click the link and it'll go to your website.
Yep.
So that'll work, or they can reach out to me and Tabitha as well.
Love it.
But we appreciate your time.
Absolutely.
I don't have anything, I mean, I do have a lot more, but
Yeah,
we
I
can't-
know.
we're not gonna do it on this call. I don't know if Tabitha has anything else.
No, I have a whole bunch of other questions, but you know what? We could go on and on and on and on and on. And I just want everybody to wake up, smell the coffee, and make some money.
Right. Make some
Right.
money the smart way,
Yep.
not the bad way.
Yep.
Yeah.
Starting
Hey,
with
and
doing
to all
it the right way.
And to all the listeners as well, I mean, seriously, follow Tab and Scott and what they're doing. They're a wealth of knowledge. They're very giving, loyal people. That's really why I vibe with them. And so that's why I really come up there and I want to support y'all in anything that you're doing. So congrats to you both on your success as well.
Well,
Thank
thank
you.
Thank you. And
Great.
you're growing. We
Yeah.
love watching you. We're like, wow, Hannah's up on the NASDAQ. Wow, Hannah's talking to the board of attorneys. Wow, Hannah's on CBS or ABC News. Wow. We're like, you just keep getting bigger and bigger. And we're sitting there going, how don't people see this? Why don't they get it? Because you're talking to a bunch of professionals and people on the news media.
It's
So
like another one of my kids.
right.
I'm like, oh my God, there's Hannah out there doing like, oh, I saw Hannah rip $100 bill in half. I wanted to choke her, but then I watched the concept of why. So
But yeah,
we tell everybody everywhere. Like I says, I just want people to wake up. Now they get to know you more. So we're gonna
Yeah.
see you soon. And
yeah.
any final thoughts?
Just no, people have to really start looking at this. This is a wealthy concept that the wealthy teach the wealthy. They don't teach the average person. And with Hannah and through us, we're bringing that concept to the average person.
Yeah.
Not to try, but to help them understand and grasp the concept of what the wealthy people do. It's just one strategy they do, but it's a big strategy. And, that's what our goal is, to just help promote
Yep.
this and promote the money multiplier so that people start taking action to help themselves. You know?
Right. Appreciate you both. Thank you.
Final
Yep, thank you.
thoughts?
My final thoughts is go out, make it a great day. Every single day is a new day. Even if yesterday sucked, stay safe. We're going to get back at it. We got a lot to do, a lot of people to serve.
Absolutely. I'm right there with you.
Yes, awesome. All right, thank
Thank
you,
you so
Hannah.
much.
And we'll
Greatly
be
appreciate you.
talking to you soon.
Thank you, y'all. See you.
Bye.
Bye.